So in this video I will be talking about liquidity, and even if you know what liquidity is, please watch the video till the end because I'll be covering the liquidity in very detail and in my own terms in simplified language. For example, and in last video many people commented that I was talking very fast. So in this video I will be talking very slowly. So let's get started. As we can see, there are three kinds of liquidity. The first one is single high low liquidity. The second one is trendline liquidity, and third one is equal highs and equal lows liquidity. So the thing is, as we can see, single high low liquidity, there is liquidity to the upside and downside. Okay, if I try to explain this, we can see the price is going to the upside. Okay, so this is our higher high, this is our higher low, and this is our higher high again. And there is order block below the structure. So if you try to understand this is the higher high, this is the higher low, this is the higher high, this is the higher low, but there is an imbalance over here. There is an imbalance over here, and there was not a retest on this zone. There was no retest on this zone. So because there is imbalance, there is an inefficiency in the market, and so price needs to fulfill the imbalance. To fulfill the imbalance, price need to take out this low. If price was going to the, if price comes to the downside and hits the order block, it will take out this low. So this is our liquidity. So this is very simple definition of single high low liquidity. Because there was imbalance in the market, price will take this higher low, then it will go to the upside. So we need to find order block which is below. So we need to find the order block which is below this structure. Okay, and there is a liquidity and there is imbalance in the market. Okay, if we try to enter in this order block because we think that this is the order block and price has broken this higher high, then most likely we will be taken out by the market. Okay, so let's try to understand the trendline liquidity. So in trendline liquidity, as we can see, price has broken the structure over here and price is creating structures which is in higher high forms, creating a structure to the upside. Okay, so as we can see, this is the higher high, this is the higher low, this is the higher high, and this is the higher low. It is mitigating. For example, there is an order block over here. Price is mitigating this order block and going to the upside. Price is again mitigating this order block and going to the upside. So many people are thinking there is a trend line over here. So in retail, people think if there is a trend line, as many of you have traded retail, we know that price makes some kind of trend line over here and they buy at the retest. For example, if price is going to the upside, they will buy at this retest. So actually market is testing the order block and then going to the upside. So it's not touching this trend line, it's touching the order block which is over here, order block which is over here, or the origin order block which is over here. Okay, so people think price is going to the upside and testing the trend line, and then price suddenly goes to the upside. So the simple definition for trendline liquidity and equal high low liquidity is that if order block is mitigated to another order block, it becomes liquidity. So again I will say, if order block is mitigated to another order block, it creates liquidity. So, and there is also an imbalance also plays an important role in liquidity also. So imbalance also plays important role in liquidity. As we can see, price has broken this structure and there is a imbalance in between the structure. Okay, from this point to this point. So price needs to fulfill this imbalance. So this liquidity should be taken out. Here many people are buying at this order block, so they need to be taken out from the market. Okay, so price will come here and hit the order block which is below the breakout structure, which is under the structure, and price will go to the upside. Okay, and the third one is equal high low liquidity, which is pretty similar to trendline liquidity. For example, in trendline liquidity there is this order block and this order block is mitigated. Okay, so price needs to take out this zone, price needs to take out these lows. Okay, and it will hit the order block which was unmitigated, and then price will go to the upside. Same in this scenario, same in this scenario. So what we need to understand is, so why price behaves like this? Because what people are thinking over here is, for example, if we try to understand like this, if price was creating higher high over here, okay, and there was order block over here, for example, there was a structure break, okay, price was going to the upside, and there is a order block over here. And what many people will think is, now price is creating uptrend over here, market structure is to the upside, so they will try to enter at this order block also. So price will come here, react from this zone, because many people are buying over here. Many people try to buy in FOMO. They will think that price is going to the upside, and they will try to buy again more position over here, and price will go to the downside, and the price will take out these lows, and it will hit the order block again. And the pro players, those who know what liquidity is, they will try to enter at this order block, and price will go to the upside. But the people who have bought over here, they will think the price is to the downside. Okay, there was a change of character at this zone, because they are thinking this is a change of character, they will try to sell at this order block. Okay, so their stop loss will be also, so now price has taken this stop losses also, and now it will take these stop losses also, and the people who are thinking that it will go to the downside, again their stop loss will be hitted. So that's how liquidity works. Okay, it will take out the new players in the market and will try to continue the direction which the trend is. Now let's see what liquidity sweep is. Okay, so there is a difference between liquidity and liquidity sweep. Okay, so this is liquidity. Okay, we can call this an inducement also. So this is exactly what is inducement. Okay, it's the similar thing, just people have given different names to it. Now let's try to mark the liquidity on real charts. So I will try to mark liquidity on daily, 4 hour and every time frame. So first thing, we will mark this market structure, where the market structure is going. Okay, as we can see, price was creating higher highs over here. Price broke this higher high, again price was going to the upside. Okay, so this is our swing high here, which have taken this liquidity also. So there is a liquidity sweep over here, and in next video I will try to explain what liquidity sweep is in detail. Okay, so there is liquidity over here, and so price came here and cleared all the liquidity, and then it is going to the upside. Okay, so we know that the trend is to the upside. So here the price was broken by this order block. Okay, so price was broken by this order block, and there is a liquidity over here. So this is some kind of trend line liquidity. So there is trend line liquidity. So what we need to do is, we have to buy from this order block, because as we know that price is going to the upside, most likely price will react from, so now price will react from this zone. Okay, so it was 1:10 from 1 hour only. Okay, we can see the price is 1:10 restored from 1 hour order block also. From just by looking at 1 hour chart, we can see the price has given us 1:10 restored. Try to mark 1 hour order block only, we can see the price has swept the liquidity. Okay, so there is liquidity sweep over here. So we know that price have given. So as we know that there is a liquidity sweep over here, and this move took out these lows. So most likely price will try to break this zone, and it will shift the direction from downtrend to uptrend. Okay, and price is creating a internal structure over here. Okay, it is making higher high. So if we try to mark order block, this is order block again, this is the 1 hour order block, and there is liquidity, because the structure is broken and price is creating liquidity, and there is imbalance also, we can see. So this is our order block. Okay, and if we try to if we go to 15 minutes, we can see trend line liquidity in this structure. So we can see this was the order block which broke the structure. Okay, so this is trend line liquidity. Again, there is trend line. This high was broken by this order block, and there was a clear structure break over here, and there is liquidity, trend line liquidity. So again, this order block is also valid. So that's how we need to make a narrative and make a bias that which direction is market is going. For that, we need to understand liquidity sweep in detail. Quick pause, folks. I've got a fantastic opportunity for you. So this is a step-by-step guide that covers everything from basics of smart money trading to advanced strategies. And what's even better is you will get an exclusive one-on-one support through chat where I will be personally guide you on your financial journey. Click the link in the description or pinned comment to join. So I will be making another video on liquidity sweep in much detail than this video. So in another video I will be posting in next week, which will be about liquidity sweep and how to identify direction of the market by looking at the liquidity sweep from higher time frame. Price created a trend line liquidity over here, but price reacted from this whole zone. Okay, so price need to retest this high. Okay, price need to retest this high, and this will take out this trend line liquidity. Okay, so we by liquidity we are not just entering on right trade, but we are also not entering in the wrong trade. What many people do is they try to enter in a wrong order block, which is this one. As we know, there was a clear structure break over here, so we will try to wait and enter at this proper order block. And the thing is, we also look for lower time frame entries. Okay, so there are two types of entries. The first one is risk entry and the second one is confirmation entry. Okay, so depending on your style, you can enter on whichever style you like. Okay, so what I do is, and again we can see price broke the structure over here. There was trend line liquidity over here, and again there was a small trend line over here, and this candle took out this low. It took out this low. So this is the right order block, and if you take confirmation entry, we can take this whole trade to the upside. So again, this is 1:10 trade. Okay, that's how simple it is to trade in smart money. Okay, let's look at GBP USD. So if we try to mark liquidity on weekly, monthly, we can see there was a structure break over here. Okay, structure break, and this was the order block. Okay, and this thing is mitigated, and this whole thing is mitigated. So it is creating liquidity. So there is liquidity to both sides. So here is liquidity and here is also liquidity. So if price needs to take out this liquidity, it needs to first take out the upper side of liquidity. So it will take all the stop loss from the upside and mitigate this order block, and then it will take the downside. Okay, so that's how liquidity goes from one direction to another direction. So price will hit this order block and go to the downside. Again, what the market is doing is, if we look at the structure, we can see, so there was a huge liquidity sweep over here, and in this liquidity sweep we know that this both lows were taken out. Okay, so most likely if we see an internal structure making, like for example, if we see internal structure over here, the most likely direction will be to the upside. As we know that liquid is already been taken out, so there is no point we need to sell, we need to look for sell side. Okay, so most likely price will go to the upside. Okay, so what we need to do is we need to find trend line liquidity and then enter at this order block, and price will go to the other side. So if we go to daily, we can see the same structure happening at lower time frame over here. Okay, and made a structure break over here. So there is a liquidity sweep. So there was a trend line liquidity over here. Price retested this zone and then it started to go up. But at looking at this chart, we can know that price was going to the upside, and we will look for entries here. Again, there was entry from here. So we can take this whole move to the upside. Okay. Again, the structure was going to the downside. There is order block over here, and there is trend line in between. So for intraday purpose, we need to look out for liquidity at 15 minutes. and price took out this high and started to go down. Okay, as we can see, there's order block over here which was not mitigated. Price came here and reacted from this order block, and again this whole thing is mitigated. So there was a potential entry over here where stop loss was taken out, but again there is a trend line liquidity over here and structure was to the upside. So we need to mark order block where there is some kind of imbalance in the structure. Okay, so price reacted from this zone and the target will be this high because everything from the upside also is mitigated. So there is liquidity over here. Now let's look at gold. From 4 hour only we can see there is a trend line liquidity over here. Okay, and there is order block over here. So price reacted from this order block and it went to the upside. Okay, so market structure was also to the upside. So in gold we can see market structure was to the upside. Price was making higher highs and higher highs, and there was a liquidity over here. Okay, and there was order block here. So we will be entering at this order block. Again, if you go to lower time frame, we can see there was a structure break over here, and the structure will happen from this order block. Again, there was origin order block below the structure. There is a trend line liquidity here. There was a trend line liquidity over here, and then price reacted from this order block, and price is going to the upside again. Again, the same thing is happening over here. We can see there is an order block over here. Price reacted from this order block again. And it's still going to the upside. If we try to understand this, so there was order block over here. Okay, and this is liquidity. So price reacted from this zone again. So that's how you use liquidity in real market. Okay, so if you found the video, so if you found this video helpful, join our masterclass. So if you found this video helpful, join our masterclass, our course. The link is in the description. And if you found this video helpful, please like and subscribe to the channel. I will be posting a next video about liquidity sweep.